And thank you very much for joining me. This is the morning market review. It's Thursday, it's the 7th of December. My name is Russell Shaw. I'm a senior market specialist at FXCM. And my email address, rshaw@fxcm.com. Just going to go ahead and bring up our disclaimers, and we'll keep these on screen for a few moments. Good morning, Michael. Good morning, Mia, Kim, Richard. Pleasure to have you all on the webinar. Thank you, everyone, for signing in this morning. It is much appreciated. Just going to go ahead and bring up our market commentaries disclaimer. Hey, Raj, good morning to you. All right, and here is our references, MarketScope 2.0 and TradingView.com. Let's go through to TradingView. Take a look at the real rate. We do have this downtrend. Okay, so you can see that the quite straight, and then you can see let's just take a look and see what's happening with the US dollar. I'm just going to press the plus button here, and we'll bring in US dollar underneath it. All right, so you can see that as the real rates move down, the US dollars move down. But again, we've got a divergence. Remember, perhaps a week ago, we spoke about the divergence at this point. So there was a divergence here. Let me make that blue. We'll make it green. There was a divergence there where you had the real rate moving up, and you had the dollar moving down. And what we said is there has to be some sort of convergence. And then what happened was the real rate moved down and caught up with the US dollar. So now we've got a different type of divergence here. And let's just bring that in. So you can see that the dollar has moved up just over the last 3 days, and you've got the real rate, which has actually moved sideways here. So again, a little bit of divergence. Now, what this basically means to me, either the real rate is going to bounce, or the dollars overreact on the upside, because we just don't see the real rate moving in the same direction. What we can do is take a look at the correlation coefficient just to see how we're doing on that measure. So just bring in your correlation coefficient. And the thing about correlations is they tend to change over time. So we've got to be very, very careful here. I just want to bring in US dollar. Okay, make sure we're measuring the right thing. Okay, we're still strong. We've got 75%, but there has been a slight movement down. That's because of the divergence that we're talking about. So I want to see if it reasserts or not. Because a break in the correlation here will mean something very specific. It will mean money is going into the US dollar as a safe haven, and it will also mean that the real rate going on because recessionary fears are growing. I'm not sure we're there yet, but these divergences are important for us to just stay on top of, to see if they maintain or if the convergence, if the two sync up again. And as we move into 2024, we just want to make sure that the story, we want to make sure that we're on top of the theme, the story. What's the theme now? The theme now is that the real rates are moving down because of that disinflation. As long as that story maintains, then the correlation coefficient maintains, we can carry on with our line of thinking, which has served us pretty well until now. But if the theme is starting to change, if we're starting to see recession, things are going to change up. The dollar then actually probably stops going down, probably exerts some sort of demand because of a safe haven type of play. And I think we've just got to be very careful to be on top of that. All right, let's take a look at the market scope and just take a look at our levels. I can see US dollar seems to have hit a resistance level. Let's just go ahead and see if that measures, because it's been a difficult couple of days because of the divergence in the real rate and the dollar. Once you have that divergence, it affects our line of thinking. We're going to have to change the line of thinking. And what we've been looking for is for a lower peak, but because the dollar's moved up over the last 3 days, the resistance levels haven't really held. Let's just see if we're getting that kind of cooperation now. So if we go through, let's just carry on with a top-down analysis. You have the dollar underneath the black 30-week exponential moving average at 1. I'm going to take this 2 out. I think we can stop monitoring this in terms of that trend line break, and I think we must start monitoring it relative to 50. And theoretically, if we are going to get a change in dynamic here, we'll measure it against a different trend line break on the RSI. So right now we just we'll take that previous break out. We're going to monitor this according to its position relative to the 50, and you can see it's hit this 30-week exponential moving average. A 30-week exponential moving average perhaps acting as some sort of resistance there. Going down to the daily chart, well, are we getting this lower peak in? What we can do here is also just put in a line of measurement over here, because we move above the previous lower peak, then we're not going to get this lower peak, then we're going to get a higher peak. So just the divergence in that real rates US dollar affecting trade this week are feeling that we've lost some of the rhythm. The rhythm was really there for us, a very orderly lower peak, lower trough, lower peak, lower trough, lower peak, lower trough. That order seems to potentially be breaking, and we just want to keep an eye on RSI. Now we can use a trend line break here as a potential warning. So take a look here. Okay, so there does seem to be a break upwards. Now 50 becomes the next level. Remember, trend line breaks on the RSI are secondary signals, they're warnings. And then what we would need to see is, well, we can draw a trend line this way as well and see if it breaks downwards. So we've got kind of 2 guideposts here, but does moved into zone 2. Zone 2 is no man's land. That makes it a little bit more difficult for us. Going through to the hourly chart here, and now we can see perhaps the resistance starting to come in. Yesterday we did see some sort of, sorry, this is from 2 days ago. We did see some sort of movement down, but then it's moved up. Now we're getting the break. Now the stochastic has turned down. This looks a little bit more useful in terms of signals. It's looking as if the lower time frame is starting to sync up with the higher time frames, and we just need to keep an eye on the dollar and see if it makes its way to the lower quintile. Does it make its way? Now, if it makes its way through to the lower quintile, then we're getting some sort of catch up here. It will actually converge again. We can put a question mark there. Okay. Does that make kind of sense? I've said a lot of divergence, convergence, divergence, convergence. The idea is the dollar sort of broke with the pattern of the real rate. It now seems as if it's starting to reconnect. Let's see if that happens. That reconnection is important for us to carry on with this ordered kind of trading. Okay. Okay, Howard's just saying that there's no sound. Can you guys hear me? Just want to make sure you guys can hear me. Can you give me a... No one else? Okay, cool. All right, good. All right. All right, so let's just see if the US dollar does reassert. So it would look something like this. Let's it would be 1, 2, 2, 3, and perhaps the pattern would be some sort of wedge pattern, something like that, like this. And now we're finally getting a breakdown. So let's see if that's the way it's going to play out. All right, if we're getting a breakdown in the US dollar, let's go straight through to gold, okay? Because gold has been moving over the last few weeks. Let's see if the movement down in gold, the movement down in the dollar is playing through into the precious metal. So let's go through to gold. All right. We've got the higher trough followed by the higher peak. We've got this underlying support at 2000. We've got the trend line break. We can monitor any trend line breaks with another one over there. Okay. And then what we can do is, let's do this on the daily. Okay. So we're kind of at the trend line support area. And what we want to see here is if the dollar moves back into zone 1. Okay. And if it moves back into zone 1, it would be following the US dollar. So the US dollar would be moving down. Gold, let's zoom in here, needs to be needs to show some sort of bullishness. Let's zoom right in. Okay, so you've got your bullish crossover here. Okay, and then you've got your bullish cross here. Now, we want to watch this carefully because by and large, we've moved sideways with gold. So we no man's land. There's no real trend, but the fact that gold's starting to pull down, hopefully then, sorry, the dollar's starting to pull down, hopefully a lift in the US dollar, a lift in gold, I beg your pardon, I'm slipping all over myself. Dollar coming down, lift in gold, if you've been watching the gold movement higher. And I think this 2000 level is the underlying support. Okay, if we're getting a lift up in gold, if we're getting a move down in the dollar price, let's go see what's happening on the risk markets. Go through to NASDAQ. Just bear with me while NASDAQ is downloading. Okay, and you can see the longer term chart to me looks positive. Longer term chart looks positive. Go through to the daily, and I think what we got to do here is measure as follows. Okay, measure as follows. So we want to see if the RSI breaks to the top side. That would be a warning signal. And look what's happening with NASDAQ over here. It's looks like it's setting up for something substantial. Now we've got to just see if it crosses below 50 or if it breaks the trend line up. And if so, is going to go to zone 1 or zone 3. Going through to the hourly chart, okay, we need to see the crossovers. Okay, so the crossover and the movement towards the upper quile. And just keep an eye on this support level here. Let's just see if the support level is going to hold. Okay, the S1 level. Okay, so it looks as if we potentially getting some sort of dip here, and I think that the NASDAQ setting up for something. We move from this overbought condition. It's now normalized. What would be very interesting is to see a break upwards. Okay. Next one we're going to take a look at is DAX. DAX to me is a tricky one. DAX is a real tricky one. Let's go through to DAX. And the reason that I think DAX is a tricky one is just because it is overbought. That to me makes the DAX an uneasy trade. The reason that we also want to just pay attention to this overbought condition is that we're very close. We're in resistance. Okay, we're in resistance here. So we just want to be very cognizant of the fact that there probably needs to be some sort of movement and then kind of perhaps a movement up into the above resistance. Now, I'm just going to reiterate here because this is very important. The theme is we've got to keep looking at the data. There's no big data today. Besides, we'll keep an eye on unemployment claims. The data needs to support a disinflation and a relative sort of strength or maintenance or sustenance of economic growth. Then I think that we will carry on being able to use this chain of causality for our positioning, which has been quite rewarding. If we start moving towards recession levels, things are going to change up and we're going to have to adapt for that. So we're kind of at that nexus at the moment. We're at this nexus, I feel, because the themes could be in flux. Yeah, exactly. All right. So that's as far as we'll go this morning. If there's any questions, please go ahead and type those in. I'm just taking a look to see if any questions come in. Right, nothing coming in. So let's conclude at this point. Let's carry on monitoring and see if the status quo is effectively maintained. Thank you very much, guys. Have a great day ahead, a great evening. We shall chat tomorrow morning. Cheers, guys.